It's time for our product review this week. We're looking at the Kotak 50 fund. Avan is here to give us an introduction into that fund. Avan.
The Kotak 50 fund was launched as Kotak 30 in 1998. It was initially meant to invest in only 30 large cap stocks, but in January last year, its investment objective was modified to hold up to 59 stocks to reduce volatility. The fund has underperformed some of its peers over different time periods, but it has managed to keep pace with its benchmark. We've also noticed a slight improvement in its performance post the change in the investment objective. While Kotak 50's large cap bias has helped it contain declines and tide through the market volatility, its performance during market rallies has been patchy. In 2009, the fund delivered 91.2% on the market recovery, while the CNX Nifty managed 102%. The fund, however, made a notable comeback in the volatile market of 2011 and limited its losses to 18% when the Nifty lost 24.6%. Let's take a look at some numbers. If you invested 1,000 rupees in this fund when it launched, you would have 9,590 rupees today.
This fund was at the number 5 spot in its category chart about 3 years ago, but then since then it's dropped. It's come down to about number 22. Can you tell us what went wrong, and if this change in investment objective that it's done last year, will that show an improvement in its performance?
You know, this has been a very well-defined fund. It has stuck to its mandate. You know, it started as Kotak 30. In the interim, it was decided that, 30 is too narrow a mandate. 30 meant that, the portfolio will never go beyond 30 stocks. And when it faced a problem in terms of not enough diversification or missing out an opportunity or a constrained mandate, then it expanded it to 39. Now it's called Kotak 50. And that has come in very handy. Because the fund portfolio was always focused, it never had a long tail. It was not taking small positions or low conviction positions. And that proved to be extremely useful strategy in the first 10 years. But what has happened since 2007 is that, on a relative basis, many of its calls didn't work the way it used to. And it has gone down on relative performance. But I would say that, given the mandate, given the stated objective, it is so tightly defined that this fund can't really commit blunders. And that is a good thing. So I'm hopeful that, if some calls go right, it can be among the best performing fund. Worst case scenario is that it has always been an above average fund even in the bad times.
Well, Dhirendra, in comparison to other large cap funds that we normally talk about, like the Franklin India Blue Chip or the ICICI Prudential Focus Blue Chip Fund, does this fund compare? So for investors who are in Kotak 50 right now, should they stay hoping for that turnaround that you were talking about?
It's very difficult, to be always in the best performing fund all the time. I would not write off this fund. I would say that, of course, Franklin Blue Chip and ICICI Prudential Focus Blue Chip are excellent fund today. But they can also face a similar thing. I remember very clearly that till 2006, Franklin Blue Chip had a similar state, and then it made a remarkable comeback. So I would not write off this fund. It's very difficult to be in the best fund beforehand. And and hindsight is perfect. This fund may not, it's more important that which is going to be the best performing funds after your investment than investing in a fund which has been the best performing fund that is banking on, continuity of the same performance. So I would say this fund is worth taking chances given its tight mandate.
All right, Dhirendra, finally your rating of the Kotak 50 fund, where would you place it?
I would place it as an above average fund and will assign it a 4-star rating.